and this is the last type of a question that may be asked in this chapter. So this is like a finding out the missing figure sums. Please find out this question in your practice manual firstly. Let's start. From the following financial data of company A and company B, prepare their income statement. Income statement simply means the format that we have already learnt, which is very easy. We'll be solving it together. Company A, company B, the data is given to us. They have provided us with the variable cost, fixed cost, interest expenses, financial leverage, operating leverage, income tax and sales. Here also missing figures are there that we have to find. So let's draw the income statement. Question number 18. Income statement particulars, company A, company B. You all know the format. Sales less variable cost gives us contribution less fixed cost. Please write the full forms, which gives us EBIT less interest gives us EBT less tax gives us profit after tax. So this is the income statement. Let's start. Sales of company A is not given to us in the question. Sales of company B is given to us, that is equal to 1,05,000. So that means that sales of company A we need to find out. Variable cost of company A is given to us, that is 56,000, and variable cost of company B is equal to 60% of sales. So that means 60% of sales for B. So we can calculate that 1,05,000 into 60% is equal to 63,000. That means company B's contribution is equal to 42,000. Fixed cost of company A is given to us, that is 20,000. Fixed cost of company B is not given to us. Interest expenses of company A is given to us 12,000 and company B is also given 9,000. Hope this is quite clear. Financial leverage of company A is given, that is FL is equal to financial leverage is equal to 5 times, and operating leverage of company B is given, that means operating leverage is equal to 4 times. Income tax rate are same for both the company at the rate 30% of EBT. And lastly sales are given, which we have already taken into consideration. So with the help of the formulas, leverages that they have given in the question, we'll find out company A's missing figure first. With the help of financial leverage, which is equal to EBIT divided by EBT. So I have already taught you all that if such is the case, then how to react. Since we don't have EBT as well as EBIT as well as EBT, but we have the interest, so we can split it like this. EBIT and EBT is equal to what? EBT is equal to EBIT minus interest. Okay, and financial leverage given to us in the question is 5. Therefore 5 into EBIT minus interest is equal to EBIT. Therefore 5 EBIT and interest is how much? 20,000 minus 20,000 into 5 is equal to 1 lakh. Therefore is equal to EBIT. Therefore 5 EBIT minus 1 EBIT is equal to 1 lakh. Wait a minute, I'm sorry. Interest is 12,000. 12,000 into 5 is equal to 60,000. We'll write it over here. 60,000, and here also 60,000, not 1 lakh. Therefore 4 EBIT is equal to 60,000. Therefore EBIT is equal to 60,000 divided by 4, which is equal to 15,000. So EBIT will simply put it here like this, 15,000. If we go reverse, that is contribution minus fixed cost is equal to EBIT, therefore contribution will be equal to how much? 35 lakh. So you have to write it like this. You have to write like this. See, contribution minus fixed cost is equal to EBIT. Therefore, contribution is missing, so we'll write contribution is equal to EBIT plus fixed cost. EBIT we have just found out, that is 15,000, and fixed cost was already given in the question, that is 20,000. So therefore contribution is equal to 35,000. Okay, you have to show this. You can't just do reverse calculation and fill the missing figures. Okay, you need to show the proof how you have found out this 35,000. So we have in a sync like this. Now similarly we have to do the reverse calculation and find out sales. So that part you can do it on your own, and therefore the sales will be equal to 35,000 plus 56,000, which is equal to 91,000. How? Sales minus variable cost is equal to contribution. Therefore sales is equal to variable cost plus contribution. So that means variable cost is 56,000 plus 35,000 is equal to 91,000. Okay, and now this is the straight logic that we have to do. EBT will be calculated like this: 15,000 minus 12,000, which is equal to 3,000, and tax at the rate of 30% on EBT is equal to 900. Therefore PAT will be equal to 2,100. So similarly we need to find out for the company B, we need to find out fixed cost, EBIT and EBT and the remaining part. Okay, so let's do that. Company B, the ratio that is given to us is operating leverage. Operating leverage formula is contribution divided by EBIT. Operating leverage is 4, and since you can see here that we have contribution, so there is no need of doing other formulas, mismatching and making new formula. We can simply write contribution 42,000 divided by EBIT. Therefore EBIT is equal to 42,000 divided by 4, which is equal to 10,500. So therefore EBIT is equal to 10,500. That means you can find out the fixed cost now. How you can find out fixed cost? Contribution minus fixed cost is equal to EBIT. We have contribution 42,000, fixed cost is missing, and EBIT is equal to 10,500. Therefore 42,000 minus 10,500 is equal to fixed cost. Therefore fixed cost is equal to 42,000 minus 10,500, which is equal to 31,500. So that means that our fixed cost, which was the missing figure, 31,500, we have found it out. Now you all can easily find out EBT, which is equal to 1,500. Only here there was need of reverse calculation. Now there is no need of reverse calculation. Tax rate is at the rate 30% of EBT, which is 1500 into 30% comes to 450. Therefore PAT is 1050. I hope this was quite easy. So firstly, please pause the video and copy this much. I hope you all have copied this much. Please pause the video and copy this much. I hope you all have copied this much. Please pause the video and copy the remaining part. If this type of sum comes in exam, it will definitely come for 8 marks because it is big sum. And do not do mistake in this type of sum because it is very scoring sum. You have to just apply your brains. Just look at the income statement, that is the format, and try to find out the missing figures using the formulas. Mismatch the formulas use your brain. Just look at the format and try to apply it in the formula. Automatically you will get your missing figures. Okay. So our financial leverage our leverage chapter is came to an end, and we are completed with this chapter. The next chapter that we are going to start is capital structure planning part 1. Okay. See ya.